Welcome, everybody. Today, I've got an incredible treat for you. This is Rich Checkan from Asset Strategies International, and we've got a longtime friend of ASI, Porter Stansberry, with us here today. Porter, we go back a long ways. I joined this firm in '96. I want to say shortly thereafter, I remember meeting you and Steve Sugarroot at a Agora Christmas party when you were with Pirate Investing to dig some things up from the past.
We
You
were
have
we
been
were we were a lot better looking back then, Rich.
Amen. I'll give you that. Thanks for bringing it up. Um, we we've seen you come out and make some claims over the years. Some of them, when you made them, oil over $100, you said it's going below 50. The Freddie Mac and Fannie Mae debacles, GM, you name it. You've said some things over the years, and you have been on the front edge of many of those things being absolutely correct. I remember when End of America came out. I was in London on business in 2011. I started watching it. I could not stop. I stayed up all night basically saying, oh my gosh. And all of those things have basically come to fruition. Now I know you're out now with a rewrite and an update. Not really a rewrite, but an update for sure. 2029, The End of America. And I've got a copy right here. I've been digging through it, trying to do my homework. I suggest everybody pick up a copy, but we want to use this as an excuse to kind of pick your brain a little bit and ask you a little bit about what's going on in the book, a little bit what's going on in the current events, and then talk about the future and where we might see you going forward. So if that's okay, I'm going to kick it off.
Yeah, let's go.
All right. So the first question I got for you is, if this system is heading toward a major reset, right, in the next few years, what are the clearest signals investors should watch for right now?
I think the clearest thing that investors should watch for right now is the yield on the 10-year Treasury rate. That interest rate pretty much guides all of the value of every other financial asset in the world because it is thought of as a risk-free rate. But unfortunately, our government is bankrupt. I don't think there are too many people who have thought deeply about what that means. But what you have seen, and Rich, I know you know this because you're deeply involved in the gold markets, but gold has gone from being a fringe asset to being the center of the monetary system over the last 5 years.
Yeah.
So now central banks around the world own more gold in reserves than they have treasury bonds. And that move out of treasury bonds as a foundational asset for the global financial system is going to continue. What I don't think people really understand is what that means for their purchasing power, for our standard of living, for our ability to project power around the world. I think it's very interesting that we can't even open a 19-mile strait currently, and nor can we force people to own our debt anymore. Unfortunately, our government is in very dire straits, and I think everyone should read the book for one simple reason. If you learn nothing else, you have to learn what happens when governments go bankrupt. And what they do is they use force and fraud to extract value from their largest creditors. And Rich, if you've read part of the book, then you know the largest creditor that our government has is the unfunded liabilities of the Social Security system. And that is right in the heart of my customers, my subscribers, and your customers. And they really need to understand what's at risk and what is happening right now. This book is not a prediction. This book is what is happening right now.
Yeah, no, that's a good point. And I wanted to get on the entitlements and so forth. You and Bill have been at the forefront of talking about the great wealth divide. And the Cantillon effect and people getting paid out first and so forth, and how important that is to having anything of value in the end when the music stops. So why do you believe now the debts, deficits, entitlement obligations have pushed the U.S. to the point where normal policy fixes won't still work?
Well,
And I know it's just a math problem, but
it's just math, yeah.
yeah,
So last year, the government's deficit, that is what they spent in just 1 year versus what they took in, was 34% of tax receipts. All right, these are unprecedented deficits.
Yeah.
The crisis of the 1970s that we saw from 73, 74 until the early 80s, where long-term rates went from 4% to 12 or 13%.
Yeah.
That crisis occurred because of the government running 2 to 3% of GDP deficits. We're now running 5 to 6% of GDP deficits. And guess what? We have another crisis in the Middle East. The
Yeah.
comparison between the 1970s and the economy today, I think, is very apt. But to answer your question directly, what's different about the current financial situation is that the government doesn't have the ability to do what it did in the early 1980s. It can't simply reset the dollar by paying a lot more interest rates in order to encourage people to come back into treasury bonds. And the reason why it can't do that is because it can't afford to.
Yeah.
You know,
20% of 39 trillion is a big number, isn't it?
yeah, the interest on our debt is already over $1 trillion a year, and we're in the sort of the doom loop part of this financial crisis where efforts to maintain dollar stability will actually cause dollar instability, because in order to maintain the dollar as the world's reserve currency, they're going to have to raise interest rates, but doing so will actually make their fiscal position dramatically worse. And so they're in this blind canyon, if you will, where they really can't get out of the situation that they have found themselves in, not without a complete reordering of the United States sort of basic social contract. And the biggest problem is they cannot afford the promises that they have made to the recipients of Social Security and Medicare.
Yeah. Now we all know when companies get in that position, they restructure. They say, okay, you know what? We promised you this. We can't do it. But how about you get most of that or some of that? Um, that's what we need to do. But that is political suicide, and that's why it's not happening, right?
Yeah, that's very clear. What I think is so interesting to me too, Rich, is this book explores more than just the math. It really explores the social, cultural, and political impacts of a society beleaguered with debt it can't pay. And when
Mm.
you see this happen in societies, you see the exact same things happen. It's just fascinating when governments get so into debt that they can only pay their debts by printing money. You see huge increases in prostitution. You see huge increases in deaths of despair, like fentanyl. You see
Yeah.
huge increases in gambling. And you also see much more aggressive foreign policy, because everything that can be done to distract the people from the core problem must be done. And
Yep.
that's what the original End of America was about, that I wrote in 2011. And those things have all come to pass. And
I know.
honestly, even in ways that blow my mind. 1 in 10 college-aged females in the United States has an OnlyFans account where they sell pornography of themselves to on the internet.
Yeah.
That's just unbelievable.
That shouldn't be your first option.
No, I think that the number is probably more than 80% of college males use sports gambling apps on their cell phones. Just unprecedented increases to these things. And of course, fentanyl is the leading cause of death for men in the United States between the ages of 18 and 34. None of these things should be occurring if we really were the wealthiest country in the world, if our economy was actually stable. But they're all occurring because so much of our modern prosperity is a monetary mirage. And that's really why I wrote the book, because I wanted everyone to know how bad it has gotten and what that collapse might look like.
Yeah. Now you talked a little bit about, a monetary reset. You talked a little bit about the standard of living and what we're accustomed to. They're tied together, obviously. So if you could, for those listening, what does a monetary reset actually mean in practical terms when you look at the markets, savings, retirement accounts?
Well, unfortunately, what it looks like, Rich, is a dramatic decrease to the average standard of living in the United States. What that really will mean is a big decrease to your purchasing power. And that's not good news for anybody. And I don't like to I don't like to paint a cloudy picture, because there is
Run
actually
for office, you won't get elected.
no, there's actually a very sunny side to the book that I don't think most people understand, which is after these reckonings occur, there will be a period of tremendous prosperity. You'll be set up for a 20 to 40 year period of prosperity. But the only way to get to that point is to clear the debts. And the only way that we can do that because of our paper money system is probably through monetization, which will mean a very large decrease to your purchasing power. And in fact, that's underway. Look
Yeah.
at the bear market you see in bonds since 2020 until today. Bond market has gone down about 50%. That's, and in terms of months, I think we're at the 68 month of a drawdown, which is a record duration. So we are the monetary reset that I describe in the book is not a prediction. It's actually underway currently. And I think it's very important for people to understand what that means. And of course, I give you lots of great solutions, and they're really not complicated. The gold is, of course, a major way of protecting your purchasing power. And right now, I'm actually very bullish on trees. People
Yep,
who
I
think
saw
that
that.
money doesn't grow on trees have never owned 11 million acres of forestry.
Yeah. A four-letter word, teak. It's not a four-letter word like you would think. So I'm glad you went there because that's where I was going next. I have read a good bit of it. I just got it 2 days ago, so I didn't get through all of it before this interview. But I do see that gold is, a pivotal point or a cornerstone of your portfolio. The way to get through this, if you will, to the other side to see that 20 to 40 years worth of prosperity. But of late, gold is kind of acting a little different than most people think it should. I have some ideas as to why that is, but after a healthy run higher, ever since the war broke out in the Middle East, gold has been going down pretty much on war and delayed negotiations, and slightly ticking up on ceasefires and progress with negotiations. I don't think this is going to last. I think this is a temporary state. But what do you think is the future for gold going forward?
Yeah, well, when you get to the end of the book, Rich, you'll see that I have a model portfolio that I've developed called the honeycomb. And what it is trying to figure out which areas of the stock market are genuinely uncorrelated, but also have very high quality economics.
Yeah.
So you're not going to survive a monetary reset by investing in airlines. It's not going to happen. Um,
Restaurants, probably not, right?
but you know what? If you own a bunch of McDonald's franchises, you're probably going to be okay.
Yeah.
And so what I tried to do is find the areas of the economy that have the best economics and who have the best track record of doing well during economic contractions. And then I wanted them also to be non-correlated so that if one doesn't do well, you don't have to worry about the whole thing doing poorly. And at the very center of that sits gold. So I think that gold should be your largest asset, and I think it's I know it's uncorrelated to everything else that I'm writing about, including trees.
Yeah.
And so if you look at the 1970s, you had a huge bull market in 1972 that was very focused in the Nifty 50. It's very, very analogous to today's Mag 7.
Yep.
And those stocks ran up 50% and 72, and then they proceeded to crater by about 90% over the next 5 years. And they did not because they were bad businesses. They weren't. They were talking about Disney. We're talking about Coca-Cola. We're talking about IBM. But their multiples were so high that there was no way that investors could be rewarded as interest rates rose. And I know you know this. I'm not sure most people do, but interest rates are negatively correlated to stock market multiples. So as interest rates go higher, stock prices are going to fall. That is just a mathematical certainty.
Same with gold.
And so if you see something like let's see SpaceX, which I believe is going to be going public at something like 90 times sales. If they could have a great business for the next 50 years, but their stock price could fall by 90% plus if you see interest rates on the 10-year go to 6 or 7%, which I don't think is even that's not even like a radical forecast. If you have GDP growth at 4% and you have inflation at 3%, that should lead to a 10-year yield of 7% if the markets are functioning normally. So what I'm saying about all of this is you really need to pay attention to your earnings multiple risk right now. You need to make sure that you continue to buy gold. I think buying gold anytime there's a 10% pullback or something like that is just good standard policy.
Yeah.
I don't think you're going to see a 50% correction in gold or anything like that. I think we're still in the very early stages of what will be a complete monetary reset over the next 5 to 7 years that ends up with something akin to the Bretton Woods monetary system or a international gold standard, because gold is one of the very few things that all of the major economies in the world can agree to exchange. I think Bitcoin is also a potential monetary asset, but it certainly hasn't been adopted as such yet. And so I would still strongly favor gold as your benchmark core fundamental asset.
Sounds good. Fantastic. So, again, if you haven't already, there will be a link below in the description paragraph to pick up your copy of 2029, The End of America, Why the Age of Paper Money is Ending, and How to Survive the Coming Global Monetary Reset. Porter, fantastic job. I can tell you what I've gotten through so far. As always, very easy to read, jam-packed with information, historical references and parallels. And you're going to pick this up and put it down probably within the same day or two. It would be my guess, and you're going to be better off for it. So encourage you to go ahead and follow that link and get that done. I want to touch one last thing before I let you go, if it's okay. I know you're super busy, but we're going to get together face to face, I believe, in September at some sort of farm in Stevenson, Maryland. Am I right?
Yeah, I host all my best customers in person at my farm in Maryland, and this is going to be our fourth conference. Let's see, 23, 24, 25. Yeah, it'll be our fourth conference at
Yeah.
the farm. And I think everyone has a great time. We also have a big new structure on the property. I built a barn just to serve as the VIP area for our elite customers. And Rich, if you play your cards right, I can give you a VIP ticket.
I'm going to play my cards right. I'm looking forward to seeing you. So that's the 23rd and 24th, I want to say, of September. You can sign up for that if you haven't already in the description paragraph below, and I encourage you to do that. We'd love to see you. You're
Rich,
going
before
yeah,
before we say our goodbyes,
sure.
I just want to remind you of something. When I started doing business with your firm, it was with your uncle,
Yeah,
Michael Checkan. And long before I was a leading newsletter writer, I was 26 years old and I knew less than nothing. And he was so kind to me and mentored me, and we traveled the world together. He introduced me to Harry Brown, among many other people. He was very kind to me. We sat down at an afternoon together at Tyson's Corner outside of Washington, D.C., and I'm going to say it was August of 2001. And I remember this vividly. And at the time, gold was trading below $300 an ounce. And I
And it was
said to him,
expensive back then too, by the way.
and I said to him, I said, Michael, I said, who is buying all this gold? Because that was when the central banks were all dumping.
Yeah,
Switzerland was selling gold. Britain sold all of their gold. Canada
yeah,
sold all of its gold. It was complete madness. And I said to him, I said, Michael, whoever is buying all this gold is going to become the wealthiest person in the entire world. And we both agreed, and I started buying gold in scale at that time, and I have never sold a single ounce of gold. And if you look at what the investment performance of those gold purchases have been since 2001, so for 25 years, we
yeah.
have been compounding our wealth at 15 to 17% a year, and an asset that is completely, it doesn't require management. No one can ruin
Well,
the
it's
brand.
dead. No
No,
interest, no
there's
dividend.
not going to be an accounting scandal associated with it.
Yeah.
It has just been such an outstanding investment, and I owe a great deal of my understanding of all that to your uncle and to your firm. And I just wanted to say thank you very much for what you've done for me, and of course all of our subscribers as well.
Well, I just want to add to that. There's a reason we've worked with you for so long, Porter. And you've heard me tell this to audiences and others, and to yourself as well. We believe in taking care of our customers, and we like working with people that take care of their customers. And that's what you do. That's what you've done since you started that firm 25, 30 years ago. And, you know, just share with everybody. We had gone to Porter with an online metals program at one point and said, would you be interested in offering this to your people. And everybody else we pitched said, how much money can I make if I offer this to my subscribers? And Porter asked, how will my subscribers benefit? Okay. That's why we work with you, Porter. We love you to death. Not to mention, you've been right so often. So, folks, if you haven't already, again, follow the link down below. Get this book. Follow the link down below. Join us at the farm in September. There's a lot more insights coming. This is not the end of it. This is just the beginning. So, Porter, thanks for taking the time and sharing this with us.
Thank you very much, Rich. It was my pleasure.
All right. Take care.